after this breakout point. But yeah, pay attention to the breakout points. They're really important. So here's another example. So we got this breakout, and in this case, this was a breakout candle that actually really worked. We broke out and the candle closed above the breakout point, right? So this is a very bullish candle. You can buy above this breakout candle right here with your ultimate risk, either under here or under here. It's completely up to you. You choose either one. If you would have done a 1-to-1 risk reward ratio, it would have been executed, so it's okay. But once again, you buy above this bull bar on a stop right there, boom, go up higher. We have a small pullback right here, right? But this is, yes, it's a bear candle, but you see how there's a fairly big retracement here. So price really didn't want to go lower. We get another bull bar right afterwards. You can buy above a bull bar, which ultimate risk underneath here. In this case, had you done that, you're going to win on this position that you took right there, and you lose a little bit on this position. So kind of would have been like a bit of a wash, but, you know, that's if it went, like if you lost, if it went lower, and price didn't even go lower at this point. So you buy above there. Once again, ultimate risk is underneath here. We go up higher, stalling out in this area. So kind of waiting to see like what's going to happen either when we break this high or when we break this low. We get a push lower. We don't break this low. We bounce off that low. This creates a double bottom, right? Or you can even say triple bottom because there's that low, and that low. So it's creating this bottom. What do you do whenever you see a bottom? You react to it. You can buy above a bull bar, which is right here, risking underneath this bottom, and you know what I'm saying? Like those are all good entries. We got one good entry right here, one good entry right here, and one good entry right here. You could say even this was a good entry because this was a inside candle from this candle. And yes, this did go lower, but if your ultimate risk was underneath here, which that would have been the smartest, at least like you can put your ultimate risk here, but your stop loss at least has to be underneath this because this is the prior low. So had you done that, if you entered above this bull candle, you wouldn't have been executed out. You still would have won on that trade if you didn't want to enter above here, if you did this one instead. So either way, bro, you just have to have a stop loss that's big enough. But yeah, and then we push up higher for the rest of this day. We end up stalling out in this area, and then we create a trading range. But once again, look at the breakout point. And even after this breakout occurred, right, we go lower. It stalls out around the breakout point. So price is bouncing off the breakout point in this case. So that's what I'm saying, man. You got to pay attention to, it's good to draw lines at the breakout point so that you can know, like, see how price is reacting at that specific area, that zone. And, you know, you react to the reaction, and you don't try to guess. You don't try to predict what's going to happen. You just react to the reaction. So yeah, so that's that example. Let's go into another example. So we got this breakout. We got this breakout above this area right here. This was the prior high, and we were in a trading range for multiple days. This is almost a full week. So this was a lot of like, price really didn't know where it was going to go throughout this week. So this breakout, this is a significant breakout. This is like, oh, this might be the continuation of a bull trend, because you don't know what happened previously to this, but these are all bull candles. So hypothetically speaking, let's say that there was a bull trend that occurred before this. So if you are buying this breakout, your ultimate risk is underneath here. Has to be at least underneath here. So you can try to buy this breakout candle, or you can wait until you get a continuation candle after the breakout. Completely up to you what you want to do. But in this case, let's just say you waited for the continuation of the breakout. So let's say you entered above here because this was the high of the breakout candle. You entered above here with your ultimate risk at least underneath here. You could have put it underneeth there, but this would have been a smarter one to do. If you're doing a 1-to-1 risk reward ratio on that, you're pretty much getting executed. We'll say that this is 41,100, and we'll say that this is 40,650. So that's like a 450 point risk that you're doing. So you would have had to at least make 450. So this was 100. You have to go to at least 550. Boom. You know what I'm saying? Like it. Almost a 1-to-1. Yes, like it's not exactly a 1-to-1, but you still would have been in profit. Even at this point, you still would have been in profit. So it is still a valid trade to take. So once again, you buy above here, risking underneath here. And then after that entry point, price is continuing in the direction. But you see how at the breakout point, you see how price was here. I think this is the hourly chart. You see how price was in that area for multiple hours after the breakout occurred. Like just because price breaks an area doesn't mean that it's going to instantly start going in that direction. You got to wait to see how price reacts. In this case, price tried to go lower, but then we created this higher low, which is a higher low than this low, and this is a higher low than this low. So Obviously, price is making higher highs because this is a higher high than this high and a higher low because this low is higher than this low. So that is bullish price action. Continuing to just keep going higher and higher and higher. And you buy above bull bars. So you could have bought above this bull bar. You could have bought above this bull bar, risking underneath here. You could have bought above this bull bar, risking underneath here. You could have bought above this bull bar, but it wouldn't have been filled until around this bull bar. So you could have bought above this bull bar, risking underneath here. Like, if you buy above bull bars with a good enough stop loss, you have that much better of a chance of winning when you're buying. If you're shorting, if you short underneath a bear bar, you have that much better of a chance of winning on a short than if you were to short underneath a bull bar. Okay? So you buy above bull bars, you don't buy above bear bars, or very limit your buys above bear bars, and you short underneath bear bars and you limit your short underneath bull bars. Okay? Always try to go with the trend because it's just easier. Price is already going in that direction. So try to go with the trend. But yeah, in this case, there would have been a couple solid entry points, but this is just to show you like this is what occurs at breakout areas, and this is a solid breakout. Here's our last example that we got. So we got this candle. This is another example of a breakout that occurred and it just continued to go. You got this solid breakout candle. This is a really solid breakout candle because if you look at all the candles previous to this, like yes, this is a big candle. Yes, this is a big candle, but this is a big candle compared to, and I'm pretty sure this is an hourly chart. This is a daily chart. Yeah, so this is a daily chart, right? This is a big daily candle that occurred after all these days. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days before this day, price is just slowly inching its way up, inching its way up, inching its way up. Then we get this huge breakout candle above this previous high, right? Price is showing, I want to go higher. I want to go higher. So had you done that, had you bought above this bull bar, your ultimate risk would have been underneath here. That's the ultimate risk. But because this is such a strong breakout candle, you can put your ultimate risk underneath here. And because this is a daily chart, you can put your ultimate risk underneath this breakout candle and just wait to see what happens. In this case, price never even went, it never even touched the breakout point after the breakout occurred. It blasted up the next day, had a small pullback, but then just continued on, just continued to go higher and higher. You could have bought above this bull bar. You see this reaction. You buy above this bull bar, risking underneath here because this is the breakout point, and you just keep going higher. You see this bull bar, you buy above that bull bar, risking underneath here. You know what I'm saying? Like, this is a long period of time because this is, once again, a daily chart. So every single one of these candles equals 1 day. So, like, this is almost a year's worth of time. Look how big of a move occurred over a year. Like, if you bought in this area, I will never forget this day because this is the day that the biggest fucking uptrend I've ever dealt with occurred. This was October 30th. This area right here was around October 30th of 2023. Had you bought above that area, and I did buy above that area, but I sold because this was a massive bear trend that occurred. So I was like, oh, the bear trend is just going to continue. So I sold in this area. To this day, I regret that shit, but it's, it is what it is. I had bought above here, and anybody that bought above here with their ultimate risk underneath this bear bar, you're never getting executed out. Like, you could still, to this day, right now, in 2025, you could still be holding this position and be up. That's what I'm saying, bro. Like, if you're investing and you're looking at a daily chart, you pay attention to this shit, you pay attention to price action on a daily chart, and you buy above a bull bar on a daily chart, bro, you may never be down. Ever. Like, in this case, you bought above here, you're down for 1 day. And that was almost a year and a half ago, right? I mean, year and a couple months. So for over a year, you're up on one single position. Like, and you could have added after every single bull bar that occurred. Had you done that, bro? Look at this. Look at that. Because this is the daily chart, so you really can't add every single day. Put a position, 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 put a position. Like, I'm not telling you to do that, but if you were watching this shit, you could have done it. Look how much you'd be up, bro. Look. It just kept going higher and higher and higher. This low right here is 32,250. This high is 40,000. And it was in April. So, once again, this was October 30th. This was, we'll just say that this occurred on March 31st, okay, just to make it easy. So we got October 30th, right? November 30th, December 30th, January 30th, February 30th, March 30th. 5 months. And you would have made, a few entries up here, you would have made almost 8,000, like 80 or 7,500 points. I'm just saying, man. This is why I'm trying to say, like, you don't. If you understand price action, you don't have to be a day trader. You can do swing trades. You can be a long-term trader. You just gotta understand how the fucking chart is moving. This is how the chart is moving. If you covered the bottom, if you covered this lower level right here, you would not know whether this is a daily chart, whether it was a 5-minute chart, whether it was an hourly chart. You would not know. A 1-minute chart, you wouldn't know. You would just know price just made this low. It tried to break lower. We get a bull bar at a low. You buy above a bull bar with your ultimate risk underneath here. Right? And even this, even though this lower low occurred beneath this low, this high, which was a lower high than this high, just got broken in this area right here. So now we're now making a higher high than this high. And then after this low occurred, we now just made a new higher low than this low because price went higher. So now this is a higher low than this low. This is bullish price action. Regardless of any chart, this is bullish price action. So you just react. Buy above a bull bar, risking underneath here. You're not losing. You're not losing. You buy above a bull bar, above a breakout, risk underneath here. You're not losing. The last thing that I want to say with this video, and I'm actually going to go back to every single one of these examples that we just did. Paying attention to the breakout point, like the high or low of the breakout candle is also very important. So like in this case, we want to pay attention to the high of the breakout candle because this was a breakdown. Breakout / breakdown, whichever one you want to call it. But this was going lower. So you want to see how price reacts at this high. Because if this candle reverses, that means we might go in the opposite direction. In this case, yes, we touched that area, but we continued to go like in the direction of the breakout candle. So this was a solid breakout. This one, right? This is the breakout candle. This is the low of the breakout candle, but this is a bullish candle. So you want to pay attention to the low in this case and not the high because this is with the trend. So this is a low. You see how this breakout candle, the low never got broken, So that is a strong breakout. That is a strong breakout in the bullish direction, right? And the reason why I'm saying this is because if you don't want your ultimate risk to be down here, at least risk underneath or above the breakout / breakdown candle. Depends on which direction. If it's down, you want to risk above the breakdown candle. If it's up, you want to risk below the breakout candle. At least, bare minimum, at least, right? Here's another example. This was the breakout candle, right? Had you risked above this, right? It's near the ultimate risk in general. But had you risked above that, would have never been executed. This is the breakout candle or breakdown, I should say, because it's going lower. Had you risked above this, you would have never been executed or nearly executed. This is still higher though. This is the breakout candle. Had you risked underneath here, this is the breakout candle. And this is the first example of a breakout candle that actually reversed. But what occurred after that reversal? We get a reversal again, right? Yes, this candle right here, this was the breakout candle. This low gets broken, but this candle didn't close underneath this low. It just broke it and came right back up. That's why I be saying though, you have to ultimately always risk like the lowest low. The last low that occurred, you always want to risk off of that. But if it's a breakout, if you want to be super tight with your risk, at least under this. And if, had you done that, had you risked underneath that, then if you would have got stopped out, you would have bought above another bull bar, would have been above this one, risking underneath here, you would have made everything back that you lost. So that's what I'm saying, man. You got to pay attention. You got to pay attention. Once again, because this is a breakout candle, you risk underneath here. Because this is in the bull direction, it's a bullish candle, would have never been stopped out. And that's a breakout candle. You don't even have to risk all the way down to here, right? Like this is a much smaller risk. And it didn't even get broke. This is what I'm saying, man. When you're paying attention, I'm going to give you another example just looking at this chart right now. This right here, right? This is a breakdown from this low, right? That's a breakdown from that low. Had you risked above here, you would have never been executed out. Never been executed out, right? Like this is the shit that occurs right here. This is a trading range and this is a breakout underneath this trading range. Had you risked above this candle, you would have never been stopped out. I'm not telling you that you have to risk below the breakout candle or above the breakdown candle. I'm not telling you always have to do that. But I'm telling you, if that breakout / breakdown candle, like the opposite extreme of that candle, does not get broken, price is probably going in that direction. Probably. There's always exceptions in trading. So there's never like 100% like, oh, this is for sure going to happen. So yeah, man, I just wanted to throw that in there because that is very important. Like that's a very, very important thing that deals with successful breakouts. If the breakout candle does not, like the opposite extreme of that breakout candle does not get hit, the breakout's probably going to be successful. So pay attention to that. And I'm going to show you examples of that like later on too. So don't worry about that. But just wanted to say that. So that's the first phase of the market cycle. The next phase of the market cycle are pullbacks. And that would be, I mean, that's a small pullback. That's a small pullback. Like these are all small pullbacks, but I'll get into that in the next video. Don't worry about it. So yeah, I'll see you in the next one. I got 2 things to mention real quick. Number 1, I am releasing the full course that this video is a part of. The full candlestick price action trading course is on YouTube right now. It's over 18 hours of free trading game. There are so many golden nuggets in this course, you're not even going to believe that it's free. But I believe this information is so valuable and so helpful for everybody. I just want it out there, honestly. I truly feel like everybody has the potential to benefit off this information because if you can read a chart, then you can profit off of it if you know how to read it with the candlesticks. And this information that I'm giving you guys, it can be used to trade on any sort of candlestick chart, right? Whether it's Apple's candlestick chart or Tesla's or gold's candlestick chart or Bitcoin's or XRP's or euro versus the dollar or British pound versus the dollar, other stock markets around the world. It doesn't matter. If there's a candlestick chart, you will have a severe edge in reading it. I truly believe that with dedicated time and practice, anybody can become successful in trading. Anybody, like a grandma can literally do it. It just takes a lot of time and effort to learn how to do it. But understanding candlestick price action will severely help your trading journey. It severely helped my trading journey. I literally learned it, and a month after I learned candlestick trading, I became profitable. I passed my first prop firm account. So that is how impactful this information is. And I'm giving it to you for free. A lot of it. The second thing I want to mention is I am releasing amazing workout programs. As I've told you guys before, I am a certified personal trainer and a certified nutrition coach, but I've also been going to school for personal training. And shout out to my instructor, Paul, because he's given me hella golden nuggets throughout my whole journey in school. Because of that journey, I now have workout programs that can positively benefit everybody. And I mean it, like, let me explain. I have a full body muscle building program, aka a hypertrophy program. I have a fat loss program, so if you want to lose 20 pounds, you get on that program. I've got a core program that'll help you develop a 6-pack like this. And I got a booty building program if you're trying to get your Kim K on. And they all incorporate a little bit of cardio because that's also very much needed in everybody's life as well. I'm also providing nutrition guides. I'm also providing recovery guides. And this is just the beginning. It's only going to grow from here. I already know how impactful it's going to be for other people because of how impactful it was for me. Because look at this picture of me from last summer and look at this picture of me from now. This progress was specifically from my muscle building and full body workout program. One of the beauties about working out and being active is it does not matter what age you are. You honestly have to do it. You need to be active. So anybody can work out with these programs. As long as you are medically cleared to work out, these programs have the tremendous potential to positively impact your life. And I'm so serious when I say this. The number one thing that you must always remember throughout both programs, whether it's the trading program or whether it's the workout programs, you must always believe in yourself and your abilities and your ability to achieve any outcome that you want, okay? Because you absolutely can, but it's going to take time, and you need to understand that it's going to take time. But if you dedicate the time, the effort, and the dedication to doing it, eventually it's going to happen. So don't stop. Do not give up on yourself. I believe in you. You got to believe in you too, okay? And you do it with this, and you do it with this. I believe. I want to end this video by letting you know that you are worth it. You are beautiful. You are absolutely everything that you want and need to be. It's already there. You already have it. You just have to realize it. That's really all it is. And always remember, regardless of what you look like, you are beautiful and you are created in God's image. And God is perfect. He doesn't do no wrong. So you are perfect. You just have to realize that perfectness within you. Or another way to say it is you have to understand the confidence and the power that you have within you. My goal is to awaken that confidence and that power within you because you truly have the power of the universe within you. You have the power of God within you. You got to understand it, man. You are one with the creator. You are a creator. So let me help you create the life that you want to create. Let's do it together. So go check out infinityian.com. Everything that you need is going to be there. And I hope to see you there. I love you guys. God bless you. And I'll see you guys in the next video.